Yeah, this week we'll focus on Federal Reserve hiking rates by 0.75%. Now I mentioned last week that if the Fed sticks to expectation and hikes by 0.75%, we will actually see a temporary market rally. But it went opposite of that. Market actually tanked because they signaled more aggressiveness to come. We'll discuss about this later. Putin declared partial mobilization in Ukraine. Now this is huge. It's probably the next black swan event that is about to occur or is already occurring. We also talk about this. Malaysia's inflation comes in at 4.7%. It is 0.3% higher compared to last month. But a lot of people are still saying that, actually it's not a big deal. Malaysia's inflation is still much lower compared to other countries out there. But is this true? Well, all this and more in this week's weekly analysis. As usual, not financial or legal advice. And a quick shout out to all our current gatherer members. We'll start with Andrew Yo-Yo, Wendy, Edward, Adam, Alex, Shafiq, Sisi, Atmos, Eric, Yimboy, Cody, Hazik, Is, Fitri, Artip, Morpheus, Urshad, CG, Balls, Waki, Dina, Leo, Kid, Mokai, Kelvin, Kai, Lanzu, Thien, Roy, Tommy, John, Rodney, Jinkang, Junlo, Helmi, and Adrian. Thank you all so much for your support. Now, a quick recap on our last week's news. Obviously, inflation came in at 8.3%, disappointed analysts and investors because they were predicting 8.1%. Nonetheless, the market tanked. You can see market reaction over here, 6% drop in minutes, and over the next week itself, 15% drop. So we have to look at the core CPI, okay? Because although some investors, they're looking at, hey, July's inflation figure is 8.5%, August inflation figure came out at 8.3%, so it's actually lower. I don't understand why the market is so worried. But core inflation actually risen from 5.9% to 6.3%. The declining prices of fuel and gas is offset by the rising prices of food, other goods and commodities. So this means that inflation, it isn't cooling. It just went deeper into the core. Despite the Federal Reserve's aggressiveness, Bitcoin was not the only victim here. You can see the Dow, S&P, Nasdaq all dumped pretty significantly, and the dollar index, which is inversely correlated to all these speculative assets, recovered pretty nicely. And also last week we did a Twitter space session with Mr. Sani. We talked about a lot of topics. For those of you guys who haven't listened to our Twitter space session, highly recommend you guys to do so. We talked about CPI data releasing at 8.3%. Why did it react so negatively? Are the rate hikes already priced in? What if the Federal Reserve fails to bring inflation back down to their goal of 2%? Now I know, although this session was conducted about 2 weeks ago, it is still extremely relevant today. So I highly recommend you guys to go ahead to our YouTube channel or Spotify and listen to the full session for free. Now, into this week's news, Fear and Greed Index, nothing surprising over here. I mean, last week we were at fear. We kind of predicted that we are going back to extreme fear this week. And I'm pretty sure we spent the entire week at extreme fear. Well, obviously, the macro factors are still pointing south, still extremely bearish. And if you allow me to shift to Bitcoin's daily chart over here, 19,000 is holding quite strongly so far. I don't dare to call this because last week I called for Bitcoin not to hold 20k, then Bitcoin really didn't hold 20k and it went back down to about 18,002 because I remember last week somebody asked me whether Bitcoin can hold 20k or not. But now whether it can hold 19k, I'm veering on towards the no side. But on a technical perspective, when we look at technical analysis, right, you see this divergence pattern over here. The RSI is actually strengthening while Bitcoin's price remains stagnant. Now typically the RSI follows Bitcoin's price. But if it doesn't, this means that there is a divergence, which means that sellers, although they managed to push Bitcoin to this current price, but their selling pressure is weakening. Therefore, I do expect, now this is based on TA alone, for Bitcoin to recover back to maybe 20k next week, give some false hope to the bulls, and after that, go on to its downtrend again. Obviously, the last line support that we are looking at, we've talked about it previous weeks also, is about 17,004, somewhere along these lines, and that will really, if we were to go below that level, that will really open the floodgates for sellers to push Bitcoin's price much lower, because the last time we ever go below 17,002 was years ago. Yeah, all right, so this is just based on the TA perspective. Now, on to the main gist of tonight. Well, more aggressiveness to come signaled from the Federal Reserve. They raised interest rates by 75 basis points, the third consecutive 75 basis point hike in a row. Now, despite adhering to market expectations, which a lot of people were anticipating the market to rally, yeah, even me, I was like, hey, they actually raised 75 basis points. So when I looked at the market, I said, hey, why did the market tank? Well, Jerome Powell brought something new up. Okay, he showed us the Fed's dot plot. If you guys listen to the replay or the live session, you'll be able to see the dot plot. It shows interest rates peaking between 4.25 or 5% next year. Now, this is significantly higher than what investors expected before the meeting, which is 4 to 4.75%. Next thing is, the Fed was expected to pivot or slow down their rate hikes into 2023, but Powell further reinforced the Fed's hawkish stance by saying the Fed is no longer certain if rate hikes will cause a recession. Yeah, he said it, he says like, no one is sure, we are not sure if these rate hikes will lead into a recession or not. Where the previous meeting, in I think July or August, somewhere along those lines, he said that US is not in a recession. Now this meeting, he changed his sentiment entirely, and he added that the chances of a soft landing for the economy are actually diminishing as the rates go higher. So these two, including this one, are the main shockers to the markets. They really caught investors off guard because investors were expecting, hey, actually, the Federal Reserve is going to continuously hike rates. We know we are already pricing in this prediction right now, but the Federal Reserve came in and said that we need to be much more aggressive because inflation is well above our target goal of 2%. So basically, they are just, again, reinforcing their hawkish stance. So take a look at this dot plot right here. Now, immediately you'll be a bit confused. What is all these dots and all those things? But let me just simplify it for you. We take a look at the one with the most dots. Okay, this is 2022. End of the year of 2022, the highest probability the Federal Reserve is looking at is around 4.25 to 4.5%. Now, this is the interest rate hikes peaking, the total interest rate hikes. Next year, you can see the Federal Reserve is biased towards the upper side of the interest rates, which goes to about 4.5 to 4.75%, which again is much higher than pre-meeting expectations. So these two are the main shockers to the markets. And right now, what is the market pricing in? Well, for the 2nd November 2022 Fed meeting, market is pricing in 73% probability of another 75 basis point hike with the current rate at 3%. So you add another 0.75%, that brings it to be about 375 basis points, which it kind of tallies to this figure over here. If you want to end the year at 4.25%, it means that the December meeting, so November they hiked 75 basis points, it brings it up to 375, right? Then the December meeting, they can either hike rates by 50 basis points or another 75 basis points.